Today I'm going to run you through a basic technical stock market analysis tutorial that absolutely anyone can pick up and use right now. How's it going, guys? Ryan here today with another tutorial, and today we're going to be talking about some basic technical stock market analysis techniques for beginners. And these are some techniques that are really fundamental to learning technical analysis, and they're quite basic to learn. You've just got to understand where to apply them and in what sort of situations. Building up a good technical understanding of the charting aspects of the stocks you're investing in or trading in will give you a big advantage when trying to predict short-term price action as well as long-term trends. But before we get into it, guys, as always, if you enjoy this video, please remember to give me a like and subscribe for more content like this. And please leave any comments, questions, or queries about the video down below in the comments section, and I'll do my best to respond to you guys and help you out as much as possible. So without further ado, guys, let's get straight into the video. I'm going to chuck my glasses on so I can actually read the screen right now, but we're going to jump straight into it. So you should be able to see my screen, and I've brought up what I think is a fantastic stock that you can analyze right now going on TradingView. It's a free app. I've reviewed it before. I've done other videos about it on how to use this platform. It's absolutely fantastic for beginners and you can get into it basically immediately. So this stock we're looking at right now is a perfect example of a stock which you can easily analyze and predict. There are lots of different patterns and theories going on within this chart, as well as the other indicators that provided a fantastic, I suppose, ability for traders to predict the outcome that was going to occur. So if we look straight onto the right side of the screen, the first thing you are looking for when doing technical analysis is the overall trend. So what direction are we going? And as you'll be able to see, our trend is effectively going up. And that's what you want to be looking for if you're trading in a bullish market, because up is exactly what we want when we're trying to make a profit, unless obviously we are shorting. So fundamentally, this should be the first thing that you look for when you're looking at a chart. The next thing you want to do is put the, I suppose, support and resistance points in place. So this is effectively called the channel. Now, as you can see, it went quite wild up here, but if we go down from the very basic point where this started to increase, which was, let's say, right about here, and we're increasing, we can see actually it took a sharp turn. You want to be looking for the points of where the stock goes up, where the stock goes down, where it's bouncing from, that sort of position. It makes it quite clear over time. So, for instance, if we were starting from maybe this point here, there we go, we can see there is a trend that has formed and a channel has formed right about here. And there we go, we've slotted that in. We can see there was a channel forming here, and it continues and it continues and it continues. And what you can see is the stock actually dropped outside the channel. Now, ideally we want these lines to be perpendicular to one another, but what we can see is the stock actually dropped outside the channel, and as a result it dropped in value. But what you also can see is it maintained support, because if we go back historically, we can see that there is a lot of support along this price point, which is right here. You can see all the price action that has occurred. That means there have been lots of buyers and lots of sellers at this point, but because it has gone down and hit this point, it is now a point of resistance when it's gone down here, but it was a support point because it is now resting at this section. So as it comes up this way, it is known as resistance. It broke through the resistance, which was great, through the channel, but then it sort of went back and it went to test it again, and you can see it dropped a few times underneath that point. That's fine, it's come back up. There's not been any drastic changes occurring. Now, it's looking a bit busy right here, but there's a few things that I'd like you to note. If we zoom in slightly more, you can actually see different things occurring. The first one is a consolidation in the value. Now, right here, we can see that the price was increasing over a period of time here. And then what's happened is it's condensed. So it's coming down, it's coming down, it's coming down, it's tightening, and you can see triangles occurred, and then this point right here is where it's absolutely burst and it's gone upwards right here. Bang, fantastic. And then what you're seeing formed is a flagpole, typical pattern. Then you see the flag forming right here, and there's the other point, and you can see the price is consolidating very small, getting tight, then bang, it bursts upwards once again. And you can see this pattern actually keeps repeating itself. And one of the key things that you'll notice in stocks is that the history tends to repeat itself. It's one of the big things. You can see this pattern has occurred. Same thing again, flag pattern right there, occurring right there. Absolutely fantastic. In fact, you may want to even decrease that, because you can see most of the price action occurred here. There was a bit of indecision, but this candle actually closed at that point there. And you can see the exact same thing happened. It went up, consolidated, broke out again, consolidated, broke out again. That is history repeating itself. You can see exactly what's happening, and this is a relatively reliable pattern to look for. But the key thing here is that the trend is going upwards. If we were seeing these sort of patterns, if it was a downwards trend, we would be breaking downwards. That is an absolutely crucial point to make. So just because you're seeing a flag pattern does not necessarily mean the price is going to go up after the consolidation. It all comes down to what is the trend that these patterns are forming themselves within. And that is absolutely critical for the success of your trading, to understand what the trend is. Now, let's keep going. We can see lots of different things occurring here. You can see that there's dojis, which means a change in the price is going to happen. So you've got the consolidation, you've got doji, which indicates indecision, buyers and sellers. And looks like what we had is a increase. So bang, it's gone up again. We're going this way. It's going up, it's going up, it's going up. Now you can see right here, it's gone absolutely crackers. Now I'll just delete that one there, but it's gone up and it's come back down real hard. This is known as it's actually quite an elongated hammer, and this is typical of another kind of reversal pattern. So in theory, what you'd expect is the price is going to rise sharply here, but then it's going to be followed by a period of decreasing value. Now obviously it's easy to see what's going to happen here given the fact that we're looking at this retrospectively, but it's a type of indicator you can use, and it's confirmed by the fact that you have a doji. There's a point of indecision. So whenever a doji occurs, it's likely that the trend in the price is going to change. So the doji's occurred and the price has now gone downwards. So as you can see, we are moving in this direction now. Perfect. And we've come to another support point. So you can see there was lots of trading action here, lots of trading action here, lots of trading action here, and as a result there has been a support point which has formed. So one of two things could have occurred here, and this is really where you've got to be watching and you've got to be reactive. the first scenario that could have happened is that the price kept going down and it broke through the support point, and that would mean that a new trend is forming and that we're going to start seeing a decrease in value to the next area of support, which would likely be about this range right here. I'll just draw it in because, as you can see, there has been plenty of price action even historically along this point. So that would act as the next support point if the price fell through here. Instead, what's actually happened is option 2, and it has bounced off the support. And as you can see, the next day after it has done so, it has shot up. You can see it's touched there and then it's actually closed upwards, which is fantastic show of the strength, and the bulls are taking over the bears in this situation. One thing you do have to realize is a stock is not always going to go straight up. There needs to be this waviness, this up and down, as you can see right here. Now, what we do see now is something that's pretty interesting, and a relatively large gap has formed. Now, typically what you'd expect is if a gap forms such as this, the price will come back to close. But in this case, it hasn't, because charting doesn't always occur in the manner that you would expect. You can never make a perfect prediction, but if you know generally what's going to happen, you can make a significantly more informed decision when you are looking at the charts. Now, what we actually see here is the gap forming, but this is known as a hammer candle. And a hammer candle is a bullish candle. So in fact, the price probably opened at around this point. We can probably actually click on it and find out. Oh, no, we can't. Let's just say the price has probably opened here. It's come down to try and close the gap, but the bulls actually won and it went wham, way up. So we've actually seen the price not go and close that gap. Now, this point is effectively now a technical location where gaps generally close, and the price is likely to, at some stage, potentially come back down to this point. And as we move further up, you'll see that a lot of indecision is now occurring and a few different scenarios could play out. So as we move, we can see that a red candle's formed. Interesting. It's once again though a consolidation. We can then see another, so this is sort of a reverse hammer has occurred, which would actually typically be a bearish indicator. It indicates that they've tried to increase the price, people have been buying, but the bears have actually won on this candle and the price has closed down. So you can see this has occurred, and typically this would mean that the price is going to now decrease, but for whatever reason, maybe it's an announcement, maybe something else has happened, the price has actually done the polar opposite and it's shot up, which is quite interesting. But what you can see now is an overall trend has started to form. So if we go from probably roughly about there, let's see. What we can see forming is a trend. And I know there's all lines all over the joint, which is probably not ideal, but you can see another trend has formed. We're going up, 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 up. Yes, there was a small point where we didn't there, but we're going up again. And what actually has likely occurred here is, if I just remove these two lines, is we have a point of resistance here. And typically what would happen is the price tests this point. So it's obviously opened up here higher. It's hit that resistance point, which is the next leg up. And it is shot through that point very, very quickly. And that is likely what has caused this to continue increasing in price. Oh, as you can see, I need to sign up. Not ideal. This might delete all my work, but that's all good. We can get straight back right here. So if we move straight back from this point, it's actually pretty handy. It's cleared a lot of our workings for us. We can see it's broken through that point of support or resistance, or even if you want to move it down here, because as you can see on these 2 days there has been buying, so we've had buying and selling at that point, there, once again there again, and there on that day it has broken through. It's absolutely smashed through. So the price is going to continue to go upwards once again, which is absolutely fantastic. And you can see with this share what has occurred once again. We have seen this pattern already. From here upwards, much like we saw down here before, the flag has made itself apparent. So what do? Okay, let's say we've got the top of the flag forming right about there. And as you can see, that right there is the flag forming. Now, if we go and we look for that point at which we draw the line, this is actually more of a interesting one. So you got to work out where are you going to draw that point? Where are you going to keep that line effectively? And it's a bit hit and miss sometimes, you know, you're never perfect, but this is probably a good location. So you can see what's occurring is this right here. So what's happened is the flagpole has formed from these 3 green candles, and what we see is a consolidation of data once again right here, and we can see it consolidating. This is more of a pennant flag this time, and we can see consolidation. It's going up and down, tighter, and it's hit this point, which is the real tight point that we're seeing here. And effectively what's happened is it's gotten to this point, and then one of 2 things could have happened. It could have gone down, test this support point again, or it could have broken through the resistance, which is effectively this top line of the flag right here. And that's exactly what it's done. It's broken through resistance, and what you can see has occurred is the bears have lost and the bulls have won out once again. And you can see we're seeing a big increase in price right here. It's going up. Now, what is going to happen at this point right here? Well, if I was just looking at the technicals and I was a betting man, what I'd say is we would have another consolidation occur. So because a gap has formed here, you can see there's a gap at 8.1, 8.2. So the price effectively needs to come back down and close the gap at 8.1 if you follow gap trading, for instance. So what will occur? We get the price increasing right here as we saw. Then what you're going to see is effectively the price is going to, once again, history repeat itself, consolidate, close that gap. Might be 1 day, might be a few days, you never know. And then effectively the same thing will occur and it's going to break out. And whether a gap appears or not, I would not have a clue. But if I was a betting man, then I'd say this is likely going to be the scenario that occurs. And the point for this to go off is obviously up here, but the point you want to surpass is this. This was the previous high, and there's been a bit of price action up here. Oh, actually it's this one here. So the next point for this stock to break out is effectively 10 cents. So if you see the price going towards the 10 cents, what's going to occur is it's going to go up, it's going to test it, see what's going to happen, and it's either going to shoot through it, and we're going to keep seeing that upwards trend continuing, and that's what you want to focus on. What is the long-term trend? Or what you're going to see is it's going to drop back once again, and it's failed. Now, one thing you do want to be careful for is if you see 3 peaks like this. So let me just show you, for instance, let me delete these. This is what you call a head and shoulders pattern, and effectively what a head and shoulders pattern is you've got shoulders, so like so, and this is something a lot of people get caught out on. You have a head, however big it may be, it might be big, might be small, you never know, something will occur, and then you'll have another shoulder, which is lower. If we saw this, we'd know the overall long-term trend of this stock would be reversing, and the price would actually now start heading in this direction right here. But that is only a potential scenario. Now, let's look at some of the other indicators that we tend to include when we're looking at technical analysis, because what you want to note is not one technique is always going to work. So let me just refresh this page once again, get us straight back into it. And what we're going to be looking at now is some other indicators. So zoom back in, look at the bottom, you can see the volume, spike, big spike. It's gone down, consolidate, consolidate, spike, spike. Once again, you can see when there's big buying days, there's big green candles, down, down. Big spikes, big red one. And what you're going to expect to see after a big red day is more selling. So it's gone down again. It's actually a green day, but you can see red, 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 red. That's typically what's going to occur. Now, let's take out one of our other indicators. Now, something I like to use is moving averages. So I like to use the 20-day. So I'm going to whip that one out. I'm going to chuck the length in here, 20-day moving average, and I also like to use the 50-day moving average. Oh, where's the button? There we go. These are good indicators of the general trend. Now, what you want to see is the price keeping above these points to maintain the trend. Now, something interesting you can see over here is that the 20-day moving average crossed over the 50-day moving average. Now, this is effectively known as a golden cross, and it generally indicates that the price is going to increase, or the trend is going to change, because you're seeing the indicators cross over each other. So the short-term trend, which is the 20-day moving average, indicates the price action that's going to occur, and the long-term trend is the 50-day moving average. So for instance, over here you can see that the short-term moving average, the 20-day, crossed below the 50-day, and this caused a dip to occur. Then when the price was going to start increasing again, it crossed back over the 50-day moving average, which indicates that this trend, which was a downwards trend occurring here, has in fact changed, and we're going upwards. And you can see it's held this point. It's kept going, it's kept going, it's kept going. It's kept going all the way up to the top. And as you can see, this is becoming sharper and sharper and sharper. Same with this one. And likely what's going to occur is if this price comes down and hits these points, this acts as a natural support point because it's the moving average. If you see the candles do something like we're seeing here, where they drop below, that's a point where you need to be careful. Either the price is going to, as I said before, shoot up, or it's going to go down. Now, let's add one more indicator into the mix, and it's the MACD. And this is a great indicator, and it shows the general, I suppose, momentum. That's how I like to look at it. And you can see a similar sort of thing occurring here. It's like against the 12-day and the 26-day though. Similar sort of a thing occurring. You can see it's going up and down and up, and this tends to follow this trend right here. And you can also see this down below, and it's a more visual representation of the same thing. It's absolutely fantastic because you can see it peaks and it troughs and it peaks and it troughs, and that one's trough, but it's getting, so it's at its steps getting smaller, 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 big, 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 smaller, 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 big. This is indicating to me that a reversal is actually occurring and the price is going to go up. So my theory about having the price come down and close this gap, or shoot up afterwards, or even it might not close that gap at all, is likely to be correct, given the fact that we're combining a few different indicators in the same place to confirm this. So we're doing a few things. One, we broke out of this small short-term downtrend right here. That's one thing. Out of that. 2, we can see that the MACD lines are crossing right here, and we can see that right there as well. That is a very, very positive sign to show that there is likely a reversal in this downtrend occurring. And the third thing to note is we've got a big green candle right there, That is something which is very, very important to focus on. I hope you enjoyed that video, guys. They're just some of the real basic things that you can look for when doing technical analysis, and that's sort of how my mind works when I'm looking at charts, just focusing on the technical aspects. It's always good though to throw in some fundamental analysis to get a grasp of the bigger picture that is occurring. So I definitely recommend you actually read into the stocks you're investing in. Maybe if you're trading stocks, you just select 10, put them on your watch list, and you just trade those, but you learn about them at the same time. You know exactly what's going to happen. Then you can combine the fundamental aspects of the stock with the technical analysis as well. And that is a great way to put yourself in a good position to make some real, genuine gains. I hope you enjoyed this video, guys. If you did, please remember to leave a like and subscribe for more content, and let me know your thoughts and the types of patterns that you use or the types of technical indicators that you've found extremely useful when you're performing stock market analysis from a technical perspective. And with that, guys, I hope you have an awesome day. See you next time. Cheers.